Hello guys, how are you? I hope you're good and welcome back to my channel. Today's lesson it's based on grade 11, which is still budgeting. It's lesson number 3. Okay, today I want us to focus on an example whereby we are given both credit sale and cash sales. I wanted to do this because most of the time learners tend to focus more on credit sales or on examples whereby they are only given credit sales. All they do, they just calculate the debtors collection schedule, and when it comes to test time, then they go to a budget question and then they find that, oh, we are given cash sales as well. Now they don't know what to do with the cash sales and they don't know how to get the credit sales, and they end up doing all the wrong calculations and end up losing marks. So I wanted to focus on this example and see what are we expected to do if we are also given cash sales, and where do we take these cash sales to. Okay, let's look at this example. It's saying it's example number 2 and it's budgeted credit sales as well as cash sales. So in this example, it means that the total number of sales that we are being given on the table, it includes both cash sales and credit sales. So, as we know that when we calculate the debtors collection schedule, we are only focusing on credit sales. So, for us to get the credit sales, we must subtract the cash sales. So that means that this, for example, there was 60,000 that we did in November, which is our actual sales. It includes both cash sales and credit sales. So, for us to calculate our credit sales that we are going to use when we do the debtors collection schedule, we first have to subtract the percentage of the cash sales. So how will you know how much are your cash sales? Remember the credit policy that I talked about. This is our credit policy here, and then it gives us information on how our debtors usually settles their accounts, and at the end you will be given an information which says note. That note will be put in blood so that you can see that it is highly important for you to look at it. So it will say note, and then they will tell you at which percentage our cash sales are. In this example, they're saying cash sales, it's 40% of the total sales. So that must tell you that in this 60,000, it includes a cash sales of 40,000, which means 60% of the sales are our credit sales, because we are saying 100% minus 40% of the cash sales, and the remaining balance will be 60%. Now you know that our credit sales that are we going to use when we do the debtors collection schedule, it is 60% of the total sales. So remember, the debtors collection schedule, we do it using the credit policy that will be given to you. In this case, this is our credit policy and it's been given as follows. It's saying 60% of the debtors pay 1 month after the date of the sale. Remember, on the previous example, it said that the debtors usually settle their account in the same their first installment is paid in the same month, which is the transaction month. But now on this one, it's saying they pay 1 month after the date. So this point, it's very important, guys. So you have to know it and you make sure that you understood it, because if you make a mistake on this one, your debtors collection schedule will be all wrong. So it's saying 60% pay 1 month after the date of the sale. This means that if a debtor comes and do a credit sales on November, they'll start paying for those sales in December. Unlike the other example whereby when they did a sales on November, they started paying at the same month. In this one, you go and purchase in November and then you come back and start paying in December for the sales that you took in November. And then 20% of the debtors pay 2 months after the date of the sale. So this is 60 days from the transaction month. 15% of the debtors pay 3 months after the date of the sale. This 15%, it is paid 90 days after the transaction month, which is 3 months. And then 5%, we know we write it off as bad debt or irrecoverable debt. So now, let's see how are we going to get our 40% and 60% from these sales. Please, guys, keep in mind this credit policy, as we are not going to come back from it, but we should remember it in our head. So, this is our calculations. We're saying 40% it's our cash sales, 60% it is our credit sales. So how are we going to calculate our credit sales? Remember, our debtors collection schedule, it's only calculated using the credit sales. Do not use the full amount of the sales, as that amount contains both cash and credit. Therefore, we're looking at credit sales. Credit sales, credit sales. Keep that in mind, guys. It's saying November, we were given 60,000 of total sales. This is our total sales, not our credit sales. It's total credit sales, it's total sales, I mean. Therefore, for us to get our credit sales, we're saying 60,000 multiplied by 60%, and it will give us 36,000. This 36,000, it means it is our credit sales, and then the remaining balance will be our cash sales. And then in December, you do the same thing up until you reach March, and then you look at the budgeted months. Now you have seen the credit sales of our budgeted month, which is January to March. That's the 3 months that we budgeted for. Now, you are going to go back and then look at the cash sales of these 3 months. The reason is, when you are doing a cash budget statement, you are going to need those cash sales. So it is important for you to calculate them, so that when you get to the cash budget statement, you will just take them from your calculations and put them under your cash sales. And then in January, you take that 50,000 total sales, you multiply by 40% to get our cash sales. This 20,000, it is cash sales, and then 30,000, it is our credit sales. And then in February, you do the same thing up until you reach March. And then this total cash sales of this month, I'll show you when we keep on moving on where you're going to put them. Now, let's look at our debtors collection schedule. We started from November, which is our actual month. And then, as I've said, 60% will be paid in December. Therefore, December, it's not our budgeted month. We do not include it. 20%, which is paid 60 days after the month of the sale, and 60 days will be in January. And then you have 7,200. 15% of 36,000 will be paid in February, which is 90 days after the transaction month, and then it's 5,400 in February. You do the same thing up until you reach February. When you reach February, you will see that the first payment that will be made in February will be in March, and March is our last budgeted month. So it's the only amount in February that you're gonna put under March. So it's 31,200 multiplied by 16%, and then it will give you 18,720. And then all the other amounts do not affect our budgeted months. Therefore, you do not include them in the collection period. Then when you are done with them, you're going to transfer them. When you transfer the totals, you're going to transfer them to a cash budget. Remember those cash sales that you calculated. You're going to take them and then put them under cash receipts under cash sales. Where it says cash sales, that's where you're going to put the cash sales that you calculated. And then receipts from debtors, These are the totals that you took from the debtors collection schedule, and then you're going to place them here. I hope everyone understood this. If you have any questions, any clarity that you need, please do not hesitate to comment below and ask questions there. I will quickly respond to each and everyone's question, and any suggestions that you may have, you can also put them on the comment section. Okay guys, thank you for watching, and please don't forget to press the subscription button and notification so you won't miss any of my videos or lessons. And please guys, I'm still asking for those who haven't subscribed to my channel, please do subscribe guys, and please keep on watching those lessons. It will be best for you. Thank you.